It's hard to know where to start at the moment. It seems George Papandreou is on the brink of stepping down as Greek PM, and the possibility of Greece leaving the Eurozone is becoming a real possibility. Mario Draghi has taken the bold step of cutting interest rates in his first meeting as ECB chief also. But let's first take a step back to Wednesday's Fed meeting, where Ben Bernanke told the world he expected economic growth to be frustratingly slow. Michael Boutros is a regular voice here on Dugoscopy TV, and he joins me now from the New York offices of FXCM. Michael, after yesterday's Fed meeting where only one member voted against Bernanke's easier monetary policy, can we now say further stimulus is unlikely?
I wouldn't necessarily say we would rule it out. I think, if anything, they've sort of let the framework float and just floated the idea that they are going to be there as a backstop. So if there is further deterioration in economic conditions domestically, they're prepared to act as appropriate, quote unquote. Now, when asked what kind of metrics they would look at to decide to implement further easing, Bernanke sort of sidestepped that. So there's not really a pledge, but nonetheless, the market did take it as sort of a backstop for further stimulus if market conditions deteriorate.
NFP Friday is always so important to traders. Are you expecting it to shake up the markets like it normally does?
In my opinion, Peter, to be quite frank, I don't really think that we're going to see too much reaction or too much volatility if we get an at-expectations print. You know, yesterday we did hear Bernanke reinforce the idea that job market growth is going to be frustratingly slow, that we're expecting unemployment to remain stubbornly high into 2012 rather. But I think the risk is if we get a very dismal print, something below 50,000, we might see a steep sell-off, which would actually give the dollar some support on haven flows. But when we really break down the metrics, I mean, whether we get 100 or 150,000, either way, it's not going to really be something enough to bring down the unemployment rate. So unless we get a really strong figure, somewhere in the range of 150, 175,000, which seems very far-fetched at this point, I'm really not expecting too much. We might get somewhat of a muted reaction.
When investors and traders continue to look towards the so-called safe havens on the back of these continued troubles in the Eurozone?
Sure, yeah, absolutely. I think at this point, the U.S. dollar is going to be the chief beneficiary of any haven flows. The yen will tend to continue to advance, but I think yen advances will be quite tempered at this point on the back of the surprise intervention that we got from Japan over the weekend. So I would expect more strength in the U.S. dollar and the Swissy on that case. The European situation as it stands now does seem to be the central focus for market participants, specifically with what's happening in Greece. This referendum kind of threw everything right off track, specifically and intentionally after last week, where we were all sort of markets were on edge, waiting to hear of this new bailout package. Now, there's talks of Papandreou possibly resigning, whether the coalition government will be formed or whether the government collapses. It's all really going to be dependent on the referendum, on whether the parliament decides to maintain its membership in the Eurozone. And, although that was a concept that seems very far-fetched if we were to talk about this a couple of months ago, it really has come to that. As, if we look at the metrics just in Greece, it's really going to be very difficult for them to sort of implement these austerity measures that are required for the bailout, specifically with all the resistance that they're getting with the rioting, the resistance just from the overall population. So it's a very high probability at this point that we could see Greece decouple from the Eurozone.
The yen is still holding above the 78 level against the dollar. Is it just a matter of time before this level breaks?
I think so. I think there's still downward pressure on this, specifically as conditions continue to worsen on the front of confidence in the overall market and broader market sentiment. So I would expect that we would see 78 give way at some point. The interesting thing is, typically when we see these types of interventions, and this is, being one of the largest ones that we've seen from the finance ministry in Japan, we do see traders really aggressively tend to fade that move to the downside. This has been a little bit more tempered on the way down, as there seems to be increased concerns that there could be some sort of extra push from Japan for an additional intervention if we do see this start to approach the pre-intervention level. So if we see this dip sub 76 again, I would expect that we would hear intervention talks surface all over the place again. So I do expect further weakness in the dollar-yen pair. However, the degree and the magnitude or the speed of which it comes down should be somewhat tempered, as investors are really going to be cautious not to test the BOJ's resolve too aggressively.
The twists and turns just keep on coming in the Eurozone. Can you sum up the general risk sentiment in the market at the moment?
Yeah, sure, absolutely. I mean, the risk sentiment at this point, I would say, is cautiously optimistic, and I say that with caution as well. We were seeing the Fed coming in and saying, well, we have measures, we have tools available to implement should conditions worsen. Although the situation in Greece, there's a lot of uncertainty. Just the fact that officials are really taking the situation a little bit more seriously, and there's action in progress, which is something that's not always easy to say with regards to what's been going on over there. But I mean, even if we look today, futures are up. We do see European markets sort of rallying on this news, but I would expect that any further developments of magnitude to really have a sharp sell-off. So although markets are cautiously optimistic and we are pushing higher here, we could continue to pair some of the losses that we saw earlier in the week. All eyes are on Europe, and any further developments at this point could really trigger a more substantial sell-off down the road.
Okay, thank you, Michael. There promises to be plenty more bumps in the road ahead, so keep it tuned to Dukascopy TV to keep informed of what's happening in the currency market and much more. Goodbye for now.